Let's go through an example and prepare the statement of cash flows. In this example, they have given ABC Company's balance sheet, and they have given comparative balance sheets, which means 2 years of balance sheets side by side. So they've given as of December 31st, 2020, and as of December 31st, 2021. They have also given you the income statement for the year ended December 31, 2021. Then they have provided additional information that you need to prepare the statement of cash flows. The requirement says prepare the statement of cash flows for the year for ABC Company using the indirect method. As you know by now, the only difference between the statement of cash flows indirect method and the direct method is in the operating activities section of the statement of cash flows. I have uploaded this question to Canvas modules as well as to YouTube in case you're watching it after your class is over. At this point, pause the video, or you can download the Excel file and then read the question carefully and then continue with the video. To help you prepare your operating activities section, I have a step-by-step guide, and I have uploaded that as well to Canvas as well as YouTube. Let's get started with the question. The statement of cash flows is a formal financial statement, so you're going to always start with the header information. I'm going to type off camera because that will make this video move along a lot smoother. First thing we always put is the name of the company. So ABC Company, that's what goes there on the first line. The second line is going to say statement of cash flows. In formal financial statements, the second line is always the name of the statement. The third line is the time period. The statement of cash flows is a period of time statement, and we prepare it for the year ended December 31st, 2021. Here's the step-by-step instructions that I had mentioned earlier. Let's go through step 1. Step 1 says, from the income statement, find the net income or net loss and enter this in the statement of cash flows under operating activities. So we start with the header of the section, which is cash flows from operating activities. The first line item, they said to go and look for net income from the income statement. So you know here's the income statement. Net income is the bottom line, so 12,800. The first line we would type is net income, and then you're going to enter the dollar amount, which is 12,800. Now let's go back to our instructions. Step 2 says, from the income statement, find depreciation expense. They want you to add this amount to the statement of cash flows under operating activities. Why add it back? Depreciation is not a cash expense. It's a calculation. Basically what we do is we allocate the cost of the asset over its useful life. We take the cost, subtract residual value, divide by the estimated useful life, and that gives the annual depreciation expense. It's not an expense where you write a check for. So it's not a cash expense, therefore we added back. We subtracted it to come up with net income, but now we're going to add it back to figure out how much is our cash flows. So here I went and added depreciation. Depreciation was 1,800. We're adding it back, so I put that as a positive number to show that we will be adding depreciation back to the net income. Another thing I want to point out is we're going to indent these next few numbers. These are going to be called adjustments to reconcile net income to cash flows from operating activities. If you're using a homework management system like Wiley or McGraw-Hill, it will give you a drop-down box. But if you're preparing this manually and submitting it manually to a Dropbox, then you will actually have to type that out. So we're done with step 2, depreciation. If you see two other things, amortization expense or depletion expense, you're going to treat it the same way as depreciation expense. And if you go to your notes, I have that as a note here. Let's move on to step 3. Step 3 says from the income statement, find any losses. Add this amount to the statement of cash flows under operating activity. Just like depreciation, losses are based on a calculation. It's not a cash expense that we pay. Therefore, just like we did for depreciation, we're going to add losses back in the operating activities section. Let's go to the income statement and see if the company had any losses. You would find gains and losses in the other income expenses gains and losses section. However, if it's a simple income statement, sometimes it may just be lumped together with all the other expenses. So let's go through and see, are there any losses? Yes, there is. There is a loss on sale of equipment for $3,000. What did the instructions say? Go look for the loss, and it is not a cash item, so we are going to add it back to figure out operating activities in the statement of cash flows. So let's go to the next line item, and it should say loss on sale of equipment, 3,000. We're going to put that as a positive number to show that we're adding it back. Let's go to the next step. Step 4 says, from the income statement, find any gains. Subtract this amount from the statement of cash flows under operating activities. Gains is not something we received cash for. It's a calculation when we sold a long-term asset. So we're going to go back and find any gains. If there are any gains, we're going to add it back to the operating activities section. Let's look in the other income expenses gains and losses section. And we see that there is a gain on sale of land of $5,000. So we go to the operating activities section, type in gain on sale of land, and then we have to subtract that. When we were calculating our net income, we added the gain on sale of land. It wasn't a cash item, so to figure out the cash amount, we subtract that $5,000. So I'm going to put that in parentheses so that you remember to subtract it when you total your numbers later. When you're preparing your statement of cash flows operating activities section using the indirect method, be mindful of how you treat depreciation expense, losses, and gains. The minute your brain thinks expense and loss, your intuition is going to be subtract them. The minute you think gain, your intuition will say add it. But to figure out the cash from operating activities, you're actually going to do the opposite. And if you understand why, it's easier for you to remember how to do that. That takes care of all the non-cash items from the income statement. But remember that in the balance sheet, we also have to look at the current assets and the current liabilities section, with those two sections also relate to cash flows from operating activities. Let's go look at the instructions. We just completed step 4, so let's get step 5. Step 5 says, from the comparative balance sheets, calculate the change in each current asset item. They said exclude cash, since this will be the ending balance of the statement of cash flows once we are done. Let's go back to the example. So here's your balance sheet and your assets section. We're only going to be looking at your current assets. Current assets are assets that the company will use up within 1 year or less. If you look at this list, our list of current assets stops when we hit supplies. Land is not current asset, it's a long-term asset. So we're going to look at the change in all these assets except for cash until we get to supplies. I'm going to ignore cash. Now when we look at the change, the way that I'm going to look at the change is what happened between 2020 and 2021. So I know that between 2020 and 2021, merchandise inventory increased. How do I know? Sorry, it's not merchandise inventory, it's accounts receivable. Accounts receivable increased. It increased from 1,900 in 2020 to 2,500 in 2021. That is an increase of $600. That's the way I want you to learn to calculate these numbers. Now that you've calculated the change, let's see what they want you to do with it. Let's go back to the instructions. It says to calculate the change. Change should be calculated from previous year to the current year, which we did from 2020 to 2021. And then it says if the change in current assets is an increase, operating cash flows decrease. So subtract that amount. And then later, if we find that the change is a decrease, we're going to increase operating activities, so we will add that amount. Think of current assets and cash flows as having an inverse relationship. Take a moment, review this information again, pause the video, and you may want to write it down. That way, for every single current asset change, we're going to apply this rule. If current assets increase, operating cash flows will decrease. If current assets decrease, operating cash flows will increase. Let's go back to our example. In our example, we had a $600 increase in accounts receivable. So we're going to go to the operating activities section and say that there is an increase in accounts receivable, but that increase of 600 we're going to subtract. So I'm going to put that as a negative number. It will cause cash flows to decrease. Since you're just learning about the statement of cash flows, don't worry about why an increase in accounts receivable translates to a decrease in cash. As you learn more and more accounting, you will be able to understand why these numbers behave this way. For now, at this stage, just try to remember the rule that a change in current assets has an inverse relationship with the statement of cash flows operating section. All right, let's go and calculate the other changes in the current assets. Let's look at merchandise inventory. Merchandise inventory, what happened? We know that there is a decrease of $200. Merchandise inventory was $800, went down to $600. In our operating activities section, we're going to say that there's a decrease in merchandise inventory. The decrease was $200. There's an inverse relationship between current assets and statement of cash flows. So I am going to add that $200 back. Do the opposite. Let's look at prepaid insurance. What happened to prepaid insurance? Prepaid insurance decreased by $400. If there's a decrease of $400, what are we going to do? We're going to increase operating activity cash flows by $400. Next, let's look at prepaid rent. What happened to prepaid rent? It went from $900 to $1,000, which is an increase of $100. If prepaid rent increased by $100, we're going to subtract $100 in the operating activities section. Now let's look at supplies. Supplies is the last current asset in our list of items. What happened to supplies? It decreased by $100. So I'm going to put that decrease as a negative 100 to show you that it decreased in the balance sheet. However, when we get to the statement of cash flows, that decrease of $100 is going to be shown as a positive number. So it's going to be increasing cash flows by $100. That's it for all the current assets. Now we're going to look at the current liabilities. I'm going to continue that section in the next video.